I'm Mike Sintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, recording this late Friday morning on October 17th. So it's been a busy week, 6 days as I record this. First, we had last Friday's drop, which was really the worst since the March-April decline on China trade fears again, flaring up. We had a volatile but decent, solid bounce for 1 or 2 or 3 days. But the last couple of days, Thursday and Friday, as I'm recording this, just more distribution. Today, not so much in the major indexes, but under the hood, there's just a lot of stocks that are kind of following through to the downside. Now, stepping back, the intermediate term trend of the market is still hanging in there. I mean, it's technically positive. You can call it on the fence, whatever you want to say, but it's not negative at this point. And I have to say the same thing for most stocks. In fact, I had just finished my update for Top 10 Trader before recording this video, and we have a lot of stops in there, and I think 3 got tripped, and maybe 22 or something did not, Now that can change. Obviously, if the market breaks down, a lot of stocks break down, that would be a more definitive market-wide signal. But for now, I still think it's a stock-by-stock situation. There's a lot of names that are, most names have come under pressure here, but a lot of names are pulling back normally. A lot of names that have been kind of gyrating sideways are still within those ranges. They haven't been breaking down. So I wouldn't be selling wholesale per se. But I would just be taking things, like I said, on a stock-by-stock basis. Going forward, just playing it by the book. Like I said, if the market does break down, which it could. Listen, we've had 6 months without really any selling in the market-wide. So maybe the market's quote-unquote due for, break the 50-day lines, raise the fear level. There's some debt worries out there. We'll talk about that in a second with the financial stocks. That could certainly happen. But this could also be kind of like the 4th shakeout to the line. And earnings season's right around the corner. And because there have been a lot of stocks that really haven't done much for the last 2 or 3 months, whether it's growth stocks, whether it's transports, financials, whatever, if we do see some positive earnings reactions, we could have a decent amount of fresher entry points, or at least lower risk entry points, in some names that have built some bases in recent times. So next week after, probably have a more definitive take on the market. Right now, I still think it's kind of stock-by-stock basis, have a little bit of cash on the sidelines, and most importantly, have a plan in place here this weekend, no matter what the market does here going forward. Okay, let's hop into the charts. As usual, I'm using a program called Market Surge. It's a product of Investors Business Daily. You can learn more at marketsurge.com. So you can kind of see if if you're just talking about the overall indexes, this is the NASDAQ. Here's your big shakeout or at least a big decline last Friday. And then since then, we've just been we popped on Monday, and we've just been kind of up, down, and all around. So no big deal, still above the 50-day moving average. In fact, I would also say that the NASDAQ, just looking at the chart, looks like one of, if not the strongest of the major indexes, which is usually a small, kind of a tertiary positive that kind of the risk-on names are still relatively strong, as opposed to, say, the Dow, soaring to new highs, and the NASDAQ's in the mud. But overall, not too bad there. S&P 500, pretty similar story. Here's your shock day last Friday, but holding above that 50-day line, but also hasn't really been able to bounce either, okay? To me, this is kind of it depends how you want to sort of measure it, but this is kind of like the 4th test, I guess, of the uptrend. Now, these don't look like major tests, but these were all kind of 2 to 3% declines in the S&P 500. All of them kind of came close to 25, 50-day moving averages, that sort of thing, before finding support. Maybe this is the one where we go south. Maybe not. We'll have to see how it plays out. But so far, you can't say the intermediate term trend is down. Now, it does get a little dicier when you're looking at some of the other indexes. Here's the New York Composite. It's basically sitting on the line. Here's the S&P 600 small cap, sitting right on the 50-day line. Mid caps are actually the weakest. I think there's a lot of, don't quote me on this, but I think there's a lot more housing and construction and stuff, which have been weak in this one. But either way, a little bit below the line. But they're all kind of right there, a little bit below, a little bit above, whatever, 1% below, 1% above, that sort of thing. So the next move could be, determinative for the intermediate term trend. Okay, spreading it out a little bit, the big thing that happened beyond the U.S.-China trade is we're starting to see some, the financial stocks, which I'm not a big, I know financials are supposed to be the all-important thing. I honestly have seen the financials lag for months, and, growth stocks do great, and vice versa. So I don't follow them that closely. But after a big run, number one, like a lot of areas, it really kind of stalled out here for a while. Number two, we're starting to see it come on here. This is the XLF. This next one here is the KRE, which is the regional bank index. You can see this was the one that got hit in, I think it was 2023 if you're around then with us, but that was like the regional bank crisis, SIVB went under and stuff like that. And there's just some bad debt fears. You're seeing some names like here's Jefferies, which is not a regional bank, but obviously looks like they had some bad loans. You can see the stock, was certainly not a leader, but certainly on a nice little uptrend here and just has kind of completely fallen apart the last 3 weeks. So some of that's rippling through the market. We'll see how that goes. But just beyond that, I keep mentioning this, but this is like the transports, which, again, it's not my bailiwick, but, no real progress for a while. Industrials, this is the XLI, no real progress for a while. So you can look at that as good or bad. There's no real progress, so here comes earnings season, and now we're getting this little fear, this debt fears, China trade fears, some fear levels going up. All of a sudden, the next 2, 3, 4 weeks, we get some really positive earnings reports, some positive reactions. Hey, wow. All of a sudden you got stocks that are breaking out up here. I'm not saying they're all going to be buyable, but that's definitely a scenario in my mind here, especially if we do shake out in the market, get that fear level up, and then all of a sudden, boom, you get some earnings reactions. Maybe you kick out some of these weak hands. But of course, you have to see it first to believe it. You can't anticipate something like that. So you got a lot of this sort of going on. On the growth front, it's actually a little bit better. This is the Momentum Fund, MTUM, holding the 50-day line. The IBD 50 index, this isn't updated during the day, but even if it's down somewhere here, it's kind of in this, I wouldn't say steep, but, gradual uptrend here. You can see it's kind of changed character here over the last few weeks. Things like the semiconductor index, this is SMH, holding pretty nicely in there. And a lot of individual stocks, that are the strong AI stocks. Again, they've taken on some water in recent days in general. Or at least had volatility, but still remain okay. So overall, like I said, the NASDAQ's a little bit stronger. Growth stocks, depends where you look. Some of them are hanging in there. Some of them are just kind of flopping around. Some of them are breaking down, but not too many to this point, okay? Last thing, just from a top-down point of view, is XLP. We are seeing some, improvement here. I wouldn't say, I can't show you our aggression index, which is NASDAQ versus XLP with a 50-day moving average and this sort of thing. But suffice it to say that even after today, it's still in positive territory on an intermediate term basis and longer term basis. So, we're not seeing like a rapid shift quite yet into there. So this is kind of, I've shown you like a million charts here, but this is really what I'm just trying to say is there's been some yellow flags out there. We've had the 2-second indicator. We've had, the broad market, new lows. We've seen a lot of names, areas of the broad market, number one, and a lot of growth stocks kind of stall out, sell on strength the last 2-3 months, honestly, while some more speculative names and some of these things get going sort of in a narrow funnel here in the AI world. So there are some yellow flags out there, and now we've seen some weakness, but we haven't seen a lot of stocks really breaking down, just like giving up the ghost. We've seen a lot of stocks go up 20 points and come back down 20 points, but we haven't seen a lot of stocks, really break, like A-Lab is one. This one looked great. This is Astera Labs, big breakdown, clearly below the 50-day line on some news. Credo, it was another leader that I wouldn't say it's broken, but it's, it's testing. This is CRDO. You can see what I'm talking about here. It did break the 50-day line, but it's kind of been trying to hold up since then. But we haven't seen a ton of, breakdowns on that front. But let's see what happens. Okay, so you can't, say, well, therefore the yellow flags are going to turn red. But right now, that's why I'm saying stock by stock basis. If something's pulling back normally, give it a shot, unless you want to take partial profits. But if you have a huge position, something's starting to wobble, you have to make a decision there. The most important thing is to have a plan here going forward, whether the market breaks down, rallies from here, or whatever. Okay. In terms of individual stocks, it's enough of a kind of a preamble there. There are, like I said, some names. Some of them have been consolidating 4 or 5 weeks. Some of them, longer. So we'll see how it goes. This is Lumentum, LITE. A lot of these unusual patterns this year with this huge decline and then just straight up. This is actually very relatively failure prone, but it worked. But this year that's worked among a lot of stocks. Kind of had this accelerating uptrend here on the weekly chart. You can see these 2 or 3 weeks up. And that was kind of a near-term top. And since then, it's been volatile. It's been sloppy, but it's been fine, right? So it's just kind of hovering here, 50-day lines catching up. You can see the stock is trying to, it seems like it wants to go higher, but the market's kind of, keeping it intact. So I'm not saying breakout. I'm not sure earnings here, early November. You can decide how you want to play it if you want to play it, but overall, kind of a developing decent pattern there. NVIDIA, I think I mentioned these guys last week. NVIDIA and Broadcom, AVGO. NVIDIA had this whatever many weeks up in a row here after a reset correction, as I call it, which basically just resets the advance. Basically a big, long, tedious decline over this period of time. And now it's come out of that, and really, it hasn't done anything wrong. There's been some selling in here, but it's not, the stock has barely budged after a big move, which is good. Now we'll see what happens. If the market opens up on the downside, sure, of course, this could get hit. In near term, that's not the best look to try to break out and come back down. But I'm just kind of watching it here. It really hasn't done anything wrong. And if this is a shakeout, to the downside in the market, and this is yet another buying opportunity, you could see something like this offer a decent entry point. Broadcom, similar, looks a little bit better actually. On the weekly chart, again, you just kind of have this straight up action on the weekly, but nice test of the 10-week here. This is where you had a nice earnings release. And so again, this is the 5 weeks now into this consolidation. Not that it can't go much longer than that, but no real much higher than it was a week ago, not to get too close to it. Well above the 50-day line. Again, seems like it wants to hang in there, so I think it's worth watching. Yes, it's a mega cap. It's not, some secret $2 stock or whatever, but there's no reason a lot of these things can't go higher. Western Digital. So I'm sort of intrigued. The storage story, so to speak, is very strong, especially with some of these, flash drive. This is like Micron technology. I do think eventually, you're going to get a pullback and it could be viable. The hard disk guys were running before this. They've been running really since the low. This is Seagate. And some of these, last week, I'm not going to sit here and say it's a top after 1 week after that run. You can't conclude that. But it is a little bit iffy on Seagate. Western Digital, WDC, though, it's a little bit stronger. You can see above the 25-day line. It might just be starting a consolidation. I'm just flagging it. It could easily it could easily pull back for months if it wanted to, obviously, or at least many weeks. But it could easily, chop and slice and dice here for a while. But the story's probably not over. It might need some time in here, but so far it is showing some relative strength, which I'm intrigued by. Vertiv, VRT. This was one of the initial leaders really with NVIDIA back in 2023 and had a huge run really into here. I guess it got up here in November, but a big correction, just over this time. Sometimes I like to look back, from this point here just a few weeks ago back to May of 2024, the stock was basically unchanged. Maybe it was up a couple points or something. But now it's kind of broken out on the upside. Again, obviously it's going to come down to the market, but so far the breakout is holding. It's certainly, as opposed to a lot of these things, they've kind of tested, like we saw NVIDIA there, and come right back in. This one hasn't done it yet, despite the market wobbling here, so I find that pretty interesting. They do have earnings next week. It looks on the 22nd, whatever day that is. Palantir, this one is, listen, this is not early. The stock broke out in August of 2024. And it was a great run, and now it's it suffered some, I wouldn't say hugely abnormal, but definitely it suffered some selling there a couple of months ago. It's worked its way back here. It's underperformed the market obviously a little bit since then because the market's up, but it has kind of formed this shelf up here. Could this be a late stage base and the stock does this? It's possible. They got earnings in early November. I think earnings going to tell a tale for a lot of these things, but I am just bringing it up that if this is another shakeout and the market gets going and this thing is up on 200% volume, next week and breaking out, it would be kind of interesting. At least, I'm not saying it would be the start of another 9-month run higher, but, it would definitely look like a breakout to me. So just kind of flagging a lot of things this week. Snowflake, mentioned this before. Again, this is what you're seeing a lot of, even in, this is sort of loosely AI, it's really software, but you're just seeing a lot of this, test 250, sell off. Oh, tested it again here, had some good news. So actually, I think it had to deal with Palantir actually, sold off, but hasn't done anything wrong. It's not like it's falling through the floor. It's just not able to get going. So you're just kind of keeping an eye on it, seeing if it can't, change character again, if the market hangs in there. And then Cloudflare, just full disclosure, we had a position in this and sold it in top 10 this week because it tripped a stop. But I'm just keeping an eye on it because I think I've mentioned this before. Like, here's the relative performance line, which peaked back here in early August. The stock hasn't done anything since then, net. But again, it's got earnings in near Halloween. And if, maybe it just does this and you don't hear from it for 3 months, but if you get some sort of snapback up here, especially after the shakeout, it would be intriguing, especially if it got up to new highs. Maybe the RP line did the same, that sort of thing. Still a great story, still great numbers. Big picture, of course, hasn't, we got stopped out because we, had a pretty tight stop in there, took a good profit. But I wouldn't say, obviously big picture, it's not doing anything tremendously wrong. So let's just keep an eye on it, see if it can't turn around. Outside the kind of tech AI sector, this is KRMN Holdings, defense, not quite as volatile, but certainly can move here. Nice little consolidation in here. Nice move up to $80, and now it's starting to pull back. Just, maybe you get a little bit more of a pullback in here. Certainly well deserved. There's a gap on the chart, but maybe pullbacks here could be buyable. ARGX, again, not your fastest horse, but certainly doing well. ARGX broke out about 2 months ago, month and a half ago. Basically, continues to look good, probably on pullbacks, but who knows? You are seeing some biotechs look good. Again, kind of like the market, a lot of these things have like no revenue, so it's like, buyer beware. But ARGX obviously is a legit outfit. ALNY Lamb, same sort of thing. We'll see what happens. It's been in this sort of tight, you can see on the weekly chart, this is very, very tight period here after this big boomlet. And it's having a good week this week overall. That said, it is kind of toying with these old highs. So like, we'll see how it goes. They do have earnings next. Well, no, it's not next week. It's the 30th. I think they might have changed that. But either way, in the next couple of weeks, it's got earnings. So we'll see how it reacts, but looks pretty good. And then last but not least, Madrigal, again, in the biotech space, MDGL. This one's smaller, $10 billion market cap, smaller. Nice breakout. I wouldn't say it was the biggest breakout of all time. Would have loved to see it kind of come up here and then consolidate. But overall, it's just been kind of consolidating nice and tight in here for a while, kind of setting you up again if you can pop up out of here, okay? So back to the overall market, you could have been negative here. If you're just going saying it's come too far, you can always pick a point where you say, well, the market's come too far and turn negative, but that's not what trend following is about. So until the trend breaks, I'm not going to sit here and say like, oh, well, this is a top and, the 2-second indicator and the narrowing of the market, because you just don't know. There could be another month-long run and then another one and, so on and so forth. But eventually you will get a correction. I think all I'll say is I think the next week or two is critical. Number one, because a lot of these stocks, either that are strong or that are consolidating or pulling back a little bit, are reporting earnings. I think that's number one. But number two, of course, is, you're starting to get sort of the financials breakdown, the debt fear, all that stuff. And so I think if the market's going to tip over, it's probably going to do it sometime soon is my guess. You know what I mean? It's probably in the next couple of weeks. We will break down. There'll be a little bit more of a conclusive sign that we're in a corrective phase. At this point, though, I would just kind of play it by the book, try not to look too far ahead. And just like I said, take it, like I keep saying, take it on a stock-by-stock basis. Have your stops in place. Have a little cash on the sideline. If you're on margin, yeah, maybe you pare back without any stops, but have your plan in place, have some stops in place, and then have a buy list in place too for earnings season and for some of these names that we've gone over if they do get going on the upside. Okay, that's all the time I have for today. As always, thanks for listening and watching, and be sure to come by again next week for another Cabot Weekly Review.